by buying gold, you're not necessarily making a statement that you're on one side or another in the coming global geopolitical crisis between the US, Russia, and China. So you can back your currency with something that will probably do much better than dollars going forward. And you don't have to choose a side in the coming World War III. So a lot of countries are doing that. They're buying gold, and they're selling treasury bonds. And so that sounds an awful lot like the crackup boom that I described before.
Yeah.
When they get money, they dump their dollars and they buy something that is real, that's going to hold its value better than currencies do.
John Rubino, former Wall Street financial analyst, notes that holding US Treasury bonds has become politically charged as the US increasingly uses the dollar to exert global influence. Countries that challenge US policies often face economic penalties, such as sanctions or exclusion from the SWIFT international banking system. As a result, many nations are seeking alternatives to reduce their reliance on US dominance. China, for instance, has been steadily moving away from US assets. In the first quarter of this year, China sold a record $53.3 billion worth of US Treasury and agency bonds. This reflects the country's broader strategy to diversify its holdings as trade tensions with the US continue. Additionally, Belgium, often considered a proxy for Chinese investments, sold $22 billion of US Treasuries during the same period. Other nations are taking similar actions. Egypt's central bank recently issued treasury bills worth 50 billion Egyptian pounds, a move aimed at managing liquidity and supporting government financing in response to rising inflation. This mirrors a broader global trend. Central banks are selling US Treasury bonds and shifting towards gold. This neutral, stable asset allows countries to secure their currencies without aligning with major geopolitical powers. The transition significantly impacted gold demand. According to the World Gold Council, India imported 140 tons of gold, 3 times as much as in the previous month, and based on the central bank's data, the most significant amount in 3.5 years. The import surge was triggered by the steep reduction of the import tax from 15% to 6%, which more than compensated for the price increase. For Chinese investors, this shift is a response to the country's declining property and equity markets, while in India, rising savings capacity has fueled gold purchases. These trends reflect a growing global movement to diversify away from US assets, with gold emerging as a critical alternative for central banks and individual investors. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Holding treasury bonds has become kind of a political statement because the US is using the dollar as a weapon.
Yeah.
Anybody that steps out of line from what the US empire tells them to do gets punished financially in some way. We'll kick your banks out of the SWIFT international bank settlement system, or we'll put sanctions on your exporting industries and not let them sell their oil or uranium or whatever. And a lot of countries who would like to, if not become world powers, but at least have some autonomy in their own neighborhood, find that very frustrating. So what's happening now is central banks around the world are selling their treasury bonds and buying gold because gold is a neutral asset. It's the old kind of money that we all used to have. And it's not, by buying gold, you're not necessarily making a statement that you're on one side or another in the coming global geopolitical crisis between the US, Russia, and China. So you can back your currency with something that will probably do much better than dollars going forward. And you don't have to choose a side in the coming World War III. So a lot of countries are doing that. They're buying gold, and they're selling treasury bonds. And so that sounds an awful lot like the crackup boom that I described before.
Yeah.
When they get money, they dump their dollars and they buy something that is real, that's going to hold its value better than currencies do, because they in a lot of cases come back to the US. If somebody dumps treasury bonds, somebody else is buying those treasury bonds for dollars, and then maybe they get sent back to the US in exchange for real US assets. In other words, the money, let's say there's 10 trillion US dollars sloshing around in the world now, and if that comes back to the US, even $5 trillion of it, into real stuff, into Miami condos or Kansas farmland or oil wells in Texas or whatever, that pushes the price of all those things up, which is to say, it pushes the value of the dollar down. So that's the big short-term risk for this trend out of treasury bonds and into gold, is that it makes the dollar weaker, other things being equal. And it brings us closer to the point where we perceive that the dollar is no longer a store of value and we just shouldn't be in it. And there's an organization called the Brics countries that is kind of leading the way here. Brics stands for Brazil, Russia, India, China, and South Africa. And they're forming a separate monetary union that doesn't require the dollar, just totally bypasses the dollar for a lot of kinds of trade, and is threatening to set up a gold-backed currency that those countries will use for trade among themselves. That'll be, backed by gold. Therefore, it will be a sound currency that will hold its value, and it'll allow them to continue to dump their dollars on the open market. So that's, it's a long-term risk to the U.S., but it is a very real risk because the Brics countries, they own a lot of natural resources. They're powerful countries.
JohnRubino notes that countries like India and China are increasingly shifting away from the U.S. dollar by purchasing more gold and silver and diversifying into U.S. assets as a hedge against dollar devaluation. Despite moving away from the dollar, U.S. real estate remains appealing due to its stability. Silver prices have surged to their highest levels in over a decade, driven by the metal's strong bull run and China's recent stimulus measures. Ole Hansen, head of commodity strategy at Saxo Bank, points out that China's stimulus is providing a much-needed boost to industrial metals like silver. However, concerns about demand from the industrial sector may temper this rally. Swiss exports to India have risen sharply in the gold market, but demand could soon soften. Despite the tax cut boosting gold purchases, record-high local prices will dampen enthusiasm once the tax relief's impact fades. This reflects a broader trend where countries seek alternatives to the U.S. dollar while balancing the short-term effects of local economic policies. Let's get back to the interview.
In other words, what does India do, or China, or Taiwan? Like you said, what do they do when they see that the financial system they've depended on for all these decades is no longer going to function the way that they're used to it functioning? And so they, in a very real sense, they have to prep in the same way that an individual American has to prep against the dollar crisis that's kind of inevitable now. And one of the things that they're already doing is buying a lot of gold. Central banks are aggressive buyers of gold right now, much more so than any time in the past. India, so far this year, their silver imports are 8 times higher than in 2023. So they're doing that one thing. They're bringing in a lot of precious metals that whatever they do with them, they will tend to hold their value and they'll be a source of wealth. China is encouraging its citizens to buy gold. In I think it's Korea, you can buy gold in vending machines in convenience stores. So a lot of the world is already doing that particular thing, and then weaning themselves off dollars or trade is another thing that's pretty obvious. If you're selling oil to China, then you take yuan instead of demanding dollars via an intermediate step now. Of course, that's not ideal, which is why there might be a gold-backed currency at some point that the Brics countries use, so they don't have to trust the currencies of the dictatorships or who are the main members of the Brics coalition. But if you're in another country, weaning yourself off the need for dollars is a very quick, very simple way to protect yourself partially from what's coming. And you see it happening all around the world. So, and here's what's interesting though, or one of the interesting things is that doesn't mean US assets will fall in value. So it's possible that weaning yourself off the dollar might involve buying US assets because if the dollar, because they will go up in dollar terms, and that protects you against a devaluation of the dollar. So, if you buy a San Francisco condo or something like that, if you're in Japan or China, it's an understandable asset that you own. It's not anything that you really have to go out of your way to figure out. You know how that works. So you just buy it, you leave it empty, and then that 10 years from now, you're going to come back to it and it's going to have some value. It won't just evaporate. It may go down in real terms, in dollar terms, but it's still going to be a valuable asset with utility. And the US is the least likely country to be invaded and blow up your condo. That's least likely to happen in the US than anywhere else. So it makes sense. So in a weird kind of way, what's happening with the dollar actually attracts capital from the rest of the world. real estate is a cyclical asset. And it used to be that it would just stop going up during recessions. But in the last recession, in 2008, 2009, house prices tanked in the United States.
Yeah.
And today's house prices are much higher than they were back during that bubble, that real estate bubble. So yeah, I think home prices in the US are due to fall. But what comes after what will probably be a deflationary recession of the next year or two, just because we've taken on so much bad debt that we have to have a recession because consumers are out of money, everything's too expensive, consumer spending will go down, the economy will slow down, we'll have a recession, we'll have an equities bear market, all of that will happen, and it'll take real estate down with it. But coming out of that, the Fed will try to inflate its way out of the recession, and then we get even more inflation. And in that case, yeah, a house or a condo in a border city or a coastal city in the US may not keep up with the depreciation of the dollar, but it will hold some of its value.
As nations and investors alike diversify their portfolios, gold continues to stand out as a neutral and reliable asset. However, short-term factors like tax policies and stimulus measures will influence demand fluctuations in precious metals markets. What are your thoughts on the global move away from the US dollar and the growing demand for gold and silver as alternative investments? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.